Okay, so in case you check your program, you'll see that we made a substitute, and this is great because I got a call from Libby this morning saying that, hey, we need you to fill some time. I took 5 minutes and I made some quick calls, so this is just a quick tip for those of you that do not answer calls on your caller ID. Unfortunately, these three gentlemen did pick up the phone. So let me go ahead and bring up our three guests today. We got Riley Gibb from Purdue. We have Pat Morand from Open Prarie Ventures, and Brad Fruth with Beck's Hybrid. So please give them a round of applause. They did not plan on speaking today. I think it's just only fair just to start with just a quick intro. So if, gentlemen, you wouldn't mind maybe giving 20, 30 seconds, quick bio on who you are, what you do.
Yeah. Hi, everyone. My name is Brad Fruth. I'm the IS manager at Beck's Hybrids. I work on the operations side of our IT fence and help with our digital strategy at Beck's.
Good afternoon. My name is Pat Morand. I'm a partner at Open Prarie. We're a small private equity fund investing exclusively in food and agribusinesses.
Thank you all for being here. Again, a special thanks to AgriNovus for putting this on. This is a great event. We're working kind of behind the scenes, but a great partner in everything that we do. I'm Riley Gibb. I'm the Director of Collaborations at the Purdue Ventures and Purdue Foundry, and we focus on capital and talent needs for the companies that come out of the university and that we're partnered with, and a lot of the ones that you just met. So we're happy to be here.
So for those of you that know me, you know that I spend most of my time talking about venture capital, talking about fundraising, talking about spending money and all that good stuff. So it's only fair that, at a startup pitch with several of these companies in the process of raising money or recently raising money, would love to get kind of each of your opinions on not just the overall venture community for these startups, but also talk about specifically how your organizations interact with tech startups like these. I'll let anyone.
I'll start and take the easy answer. So John Hannig mentioned earlier some of the things that we're doing at Purdue with, especially with our Ag+Bio+Science. It's a fund that we put $100,000 per semester into plant science companies that come out of the university, and I think that's one data point. And then John also mentioned the $400 million in additional investment that have come into Purdue University related startups, and that's a bigger part of what we do, is build this network and kind of put our stamp of approval first, that allows a lot of that additional follow-on company or money to come from different entities, such as Open Prarie and a lot of the companies that Aaron works with. But so that's really a big part of what we do, is help them and prepare a lot of these early stage companies for that investment and bring that attraction level and really be a cheerleader for what's happening here in the Midwest.
We at Open Prarie are investing out of our fourth fund. It's a USDA licensed Rural Business Investment Company, RBIC. We're the third license. We raised just short of $81 million. We're investing exclusively in EBITDA positive food and agribusinesses in rural communities. But it's really important to be at events like this to meet earlier stage companies, because they will become EBITDA positive, and we want to get to know companies early on as they are preparing for people like us, and maybe we can help them along the way.
Well, unlike these two gentlemen, I have no money. So at Beck's Hybrids, we don't have any direct investment, but our place in the market is what we do have is we have access to the farm gate. We have a digital platform that we can help you integrate with, and we can basically get you to the farm gate. However, how we kind of interface with the startup group, we're more than happy to take a look at the product, but we will ask that you go through a little bit of testing with us to make sure that we can also validate that product, that you've got a really good value pitch, you know exactly what that is to the farmer, and then we can talk about partnering on how we actually can get you onto the farm gate. So I have no money, but I have customers and opportunity.
I won't let you off the hook just yet, Brad. So maybe talk a little bit about how these partnerships work. Are there any specific industries or any specific technologies out there that you're looking for? I mean, we saw hardware, software platforms today.
Yeah, that's a great question. So we love to attend ag tech focused events like this. We have a phenomenal research group at Beck's Hybrids that's very interested in the genomics side and the traditional ag tech. I found myself at different startup events, so we've been keeping a close eye on supply chain and logistics. We're going to do a partner with an autonomous forklift driving company, so anything that can enhance our operation, whether it be directly to the farm gate or even just our own, how to grow seed corn, how to move it. Farmers never change their mind once they order seeds, so that's not a problem for us. But anything that we can use to operationalize and get more efficient, so that we can in turn keep our price as low as we can to the customer, we're very, very interested in that. So it could be hardware, software, supply chains. We've got a research focus. I'll talk to anybody once.
Okay. Anybody wants. All right. Pat, question for you. As you mentioned, you're on your fourth fund now. You're not only active in the Midwest, but nationally. You make investments all over the country. Can you tell a little bit about kind of what you're looking for, or what's exciting to you, what technologies out there or what companies out there are really kind of piquing your interest right now?
Sure. As I mentioned, we are looking at EBITDA positive companies, and we're seeing a lot in rural communities. The USDA defines rural as any community of 50,000 or fewer. It's not like Carmel, which could be less than 50,000, but it's part of urban Indianapolis. Our first investment, for example, was in beautiful Scandinavia, Wisconsin, population 290. A company making alfalfa seed, running $31 million a year in revenue with $4 million EBITDA, looking to take some off the table and join a platform. So we're seeing things like that in seed companies, literally seed. We're also seeing advanced technology. We like niches. Another niche. I was talking to a company this morning out of Wilsonville, Oregon. They have 6,000 customers around the world controlling birds and fruit growing operations. So these really interesting little niches. At the moment, we are tracking 16 companies in Indiana. This Friday, I have a long call with a company in northeast Indiana looking for $4 million in mezzanine financing, which is of particular interest to us.
Okay. Riley, a question for you. I know that Purdue is very active in the startup scene. We've heard announcements of SVG, which is a accelerator that's about to launch their next cohort in West Lafayette, hopefully by this fall. Can you talk about, just in terms of working with the founders at the earliest stages, what they need to do to interact with you and the foundry, and more importantly, as they graduate or as they move on to the next level, how do you help them enter the real world and find guys like Pat and guys like Brad?
So we spend a lot of time at the foundry on the education side of it, and really helping founders that are traditionally very scientific understand what it means to go out and raise money, and that it's not just going out to Silicon Valley and knocking on a door and somebody's going to hand you $10 million. There's a couple steps in between that process of founding a company and getting big investment, and so we spend a lot of time really focusing on business plans, value propositions, those types of things. And then as the companies progress, as the founders progress, introducing them to the right people, whether that's a mentor, an advisor, potential customers like Beck's, and then up to potential investors, and trying to prepare them along the way. Because like Brad said, he'll talk to anybody once. That's investor think as well, and we want to make sure that that first time that you talk to somebody is very beneficial for both parties. And so we spend a lot of time really focusing on those relationships and making sure that everybody's prepared to make the most of that opportunity.
Perfect. Not that we want to hog the whole conversation, and I can continue to ask these guys questions, but if the crowd has any questions or anything that they would like to comment on, feel free to raise your hand or chime in, and I'll repeat the question. Go.
Just a quick question on, mainly for Riley, Pat, maybe not so much Brad, equity requirements, the minimum, the things that you expect or would like to see when you make your investment. And second, how involved are you in management?
Okay. Make sure I get the question correct. So the question's around equity. So for those companies that are raising capital, how do investors manage equity, as well as how do investors play a role in the management or advisory of the companies?
Very good. The first thing about equity is that initial conversation or arm wrestling over what's the value of the company. How much is it worth? How much are we engaged to put in? And having that conversation. We like equity investments. In our thesis, we want to have a hold period of no more than 3 to 5 years, which means the other question about equity is we're putting money in. We have a moral duty to our investors. How do we get money out and when? On the management side, we are very active investors. We want to be shoulder to shoulder with management, so we make sure there's a large option pool available of equity for management. But we try to bring our networks. For example, we brought on an investor who's now part of our general partnership, the just retired CEO of Rabobank of North America. This guy, Rajiv, has contacts worldwide. Rabobank is the largest ag bank in the world. So we bring that to the table as well.
And we're a little bit on the other end of the spectrum where we're just looking to do proof of concept funding, very early stage, a minimal amount of money, but try to get that proof of concept. And so we'll do a lot of convertible notes, safe agreements, those types of things where we're not taking actual equity. We're just trying to get that proof of concept and again, get these companies ready to go to the Series A, Series B, more on the equity rounds.
Just speaking in general, and please feel free, I mean, most seed rounds, early Series A rounds, generally are looking for about 10%, 10 to 15% of the equity. Proper Series A rounds could ask for anywhere between 15 to 20% of the equity. So as you're growing your company, advice for the startups here, as you're growing your company, look for investors who you want to partner with, because they're going to be with you for the long run, not just in the current round that you're raising, but hopefully for the future rounds that you're raising. And hopefully they have your best interest at heart as well when it comes to interacting with other follow-on investors. Yeah.
One other point about that as entrepreneurs yourselves, I hope you're doing diligence on people like us. We've been in deals with other funds that are toward their 10-year limit. Funds are 10-year instruments. And as you get near that 10th year, there starts to be pounding on the table to get out of the investment. So it's really important on your part to do diligence on us, the age of the fund, how much money's left, because every investor should put money aside, at least on the books, for follow-on, even if you don't believe there's going to be follow-on. It's important to have that. So select your investors as well.
There's a lot of question for you guys. There's a lot of, I'll call it still, hype around food tech and kind of the latest craze and what people are eating, or the latest nutritional crazes, things like that. How do you kind of, I know you meet with everybody once, you're willing to have one coffee with them, but how do you kind of manage your investment thesis or your partnership thesis when it comes to selecting, what industries or what startups you really want to work with?
So a big pet peeve of mine are buzzwords. So I think that we drop all the buzzwords at the door. I want to see real work, and I want to see a real ROI, not fantasies. So I told somebody the other day, but the next person that comes in and tells me they have AI, I'm going to flip the table over and just run out the back door. So having that value pitch rock solid is what we're looking for, not hopes and dreams.
As for us, we think there are markets. And if there's a market where someone wants to buy something, we think there's value there.
And we tend to take anybody that wants to come and use our services. And then through our process, we help them understand the markets and understand what's important to potential consumers and products that are important. So we do a lot of self-discovery and let them determine that.
Yeah. Another question kind of for the group here, and I'd love to also hear comments from the crowd as well, but Agri-Novus has done a great job of kind of harnessing all the state's resources, in order to be the loud piece for the state's entrepreneurs in this space. I mean, what else could your organizations do, or what else are you seeing venture capital firms that could do specifically for Indiana that could either work with organizations like Agri-Novus, or as well as harnessing resources from outside of the state as well that you know about that we aren't currently utilizing?
We're fortunate enough to have a lot of contacts outside the U.S. Just the other day I was talking to an Israeli company looking for a home in the U.S., and knowing what I know about Indiana, I live in Michigan just across the border, but knowing what I know about Indiana, I was encouraging that CEO to at least consider and come to Indiana and take a look as a place to call a U.S. home.
Yeah, I mean, when you look at, I think there's some amazing things going on here. Not only, I think Agri-Novus is doing a great job. The whole CICP group, each has its strengths, and a lot of it is being an evangelist, so that when you run into folks, there's stuff going on in Fort Wayne. There's some interesting stuff going on in Ag Tech in Kosciuszko County. There's some great stuff going on in South Bend and Terre Haute and Indianapolis. You got the IoT lab in Fishers. I mean, a lot of it is just connecting people and saying, hey, you should really reach out to this person, whether it's an Israeli startup or some other seed startup down the road. It's about just making those types of connections, and even if you don't know anything about it, hey, I've heard about this, maybe you should go chat with this person.
Yeah, and I think Agri-Novus does a great job of being that sponsor. And just recently we've had a couple big companies, Inari, that Julie represents, being one that's moved operations into Indiana. Slim Tech just opened an office in the research park in West Lafayette. They came from Brazil, and part of their headquarters is now in Indiana. So we're proud of those relationships. Agri-Novus does a great job of really championing what's happening here, and along with that exposure comes some of the venture capital and SVG partners, the Thrive Accelerator. All of those just add to the narrative that's being built here.
Yeah. And when it comes to venture capital around Indiana, some of you have heard me say this before, but it is a statewide effort. It's not all just in Indianapolis. In 2018, 50% of all the venture deals in Indiana took place outside of Indianapolis. And so I love seeing contingents here from Fort Wayne or Evansville. I mean, it's important that we recognize the four corners of the state when we're talking about all the venture activity and all the neat startups that are growing in the Hoosier State. So a couple minutes left. Wanted to make sure if anyone had any questions or any comments. If anyone wanted to make fun of Pat's vest. Oh, there we go. There we go.
How do we change the conservative dynamic of our venture funding in the state? Horribly conservative is something that should be much more invested in, like other technology platforms that exist in the market.
So the question was around how do we change the venture capital environment. I'm going to say probably lack of risk tolerance, as I like to refer to it, in Indiana. Any of you guys want to comment first?
In spite of this manly vest, we like Midwest companies because we see there's real value there, and we don't like risk. And we've made a lot of money for our investors, so at the same time we're drawing in syndicates from the coast, Europe, and increasingly South America because of that very value proposition.
I'll just kind of add on that, even though I have no money. That one of the interesting things that we have to remember about ag tech and when you talk to technology companies is that they're used to this really fast innovation cycle. So if you want to look at, let's say, algorithms or something around planting, that happens on my farm in 4 days. So I can't just go out and plant in April. I can, but I'm wasting time. So some of it is the innovation cycle is different. And so I think some investors don't understand that. And so while it might take longer to get your money back out of it, they don't understand that we just can't go tweak an algorithm and then go run a planter in the next 10 days. So it's a little different. So I'm not sure if that helps or...
Let me just add something real quick. And my IEDC friends in the room, please don't yell at me, but Indiana is somewhere around, let's just say 15 or 16 in terms of GDP, in terms of the 50 states, but we're somewhere around 26, 27 when it comes to venture capital. So the state has money. The state has the ability to produce. The state has the ability to perform and return capital. That is proven. It's the risk capital that we don't have. And when people talk about, well, why don't we have risk capital? Why don't we have more VCs here? That is a big generation or mind shift that needs to occur. And I would hope that everyone in the room could play a part in that because, like these guys have all said and all the startups have advocated, we need to talk more about, all the neat ideas, all the cool companies that are coming up. These are the things that VCs want to see. These are the companies that they're looking for, the high growth companies, the ability to, produce technologies that companies like Beck's or Corteva or whomever would be looking for in the future. But until that kind of generational shift or mind shift happens, it's very difficult to attract the coastal dollars, the Silicon Valley money, and compete with California on that level.
Yeah, and I would just add that it takes a couple success stories. Then we start getting some of the traction. The tech space has seen it with Salesforce and some of ExactTarget and some of those acquisitions and exits, and in the ag space it's no different. As soon as we get some of those big ones that make a lot of noise, then all of a sudden the money's going to come and people are going to realize what those returns look like and go from there.
Yeah. Any other questions? Okay. All right. Well, gentlemen, with that said, I appreciate your time. Thank you very much.